Welcome. In this video is ZBCN coin preparing for a giant rise. We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. From a broader perspective, we can see that the clearly defined downward trend structure, which the price has been moving within for a long time, still remains valid. This descending trend line acts as a critical technical barrier that guides price movements and defines the psychological boundaries for investors. Especially with such long-term downtrends, they can be considered both significant resistance levels and potential reversal points that carry considerable potential if broken. At present, although the price has occasionally attempted upward moves, it has yet to decisively break above this downward trend line. However, the price gradually approaching this resistance line and pulling back less with each touch suggests that buying pressure is slowly increasing and sellers are losing strength. This resembles a pressure buildup scenario often encountered in technical analysis. As a result of such pressure, it is highly likely that the price could break through the resistance area and make a sharp upward move. Descending trend lines are among the most closely watched structures by investors, particularly on long-term charts. A break above this trend not only signals a change in the short term, but could also indicate a shift in the medium and long-term market structure. The current chart presents exactly this kind of potential. The price is steadily and calmly climbing toward this key resistance level, forming higher lows with each pullback, thereby laying the groundwork for an upward move. It's important to note that trend lines are not just simple lines drawn on a chart, they are also a reflection of investor psychology. Especially with long-tested lines like this descending trend line, they serve as indicators of whether market confidence is being reestablished. When the price breaks such lines to the upside, many investors interpret it as a vote of confidence and tend to increase their positions. This can lead to stronger upward moves supported by higher volume. Moreover, the manner in which the price approaches this descending trend line is also very important. If the price is approaching this area with stronger and more voluminous candles each time, it suggests that the likelihood of a breakout is increasing. In the current chart, a similar structure is present. The price has recently approached the descending trend line with strong volume support, highlighting the determination on the buyer's side. Such volume-backed movements typically increase the probability of a successful breakout. It should not be forgotten that in technical analysis, trend breakouts are confirmed not only by the breach of the line, but also by price behavior afterward. If the price manages to break this descending trend line upward and then tests it as support and stays above it, we can conclude that the breakout is healthy and sustainable. This provides a strong technical argument that the price may test higher levels in the coming days. In this context, the breakout of a downward trend is not just a graphical development, but also an indication of a shift in market sentiment. Investors begin to believe that the downtrend has come to an end and that a new upward trend may be beginning. This can attract more interest, more capital inflows, and consequently, stronger upward movements. Currently, the price is consolidating just below this descending trend line, appearing to be in a phase of gathering strength. Such sideways or narrow-range movements are often seen as precursors to significant moves. If the price makes an upward move and surpasses this trend line, a rapid upward trend may very well follow from a technical standpoint, but we can't rely on trend lines alone for analysis. Let's also take a look at other metrics. Stay tuned. When we look more closely at the chart, it appears that the price, after completing the first wave in accordance with the structure of the Elliott wave theory, is now gradually moving into the second wave phase. From a technical analysis perspective, this can be considered a very natural and healthy correction move. In Elliott wave structures, the second wave is typically a corrective move following the first wave, and the period during which this correction occurs often signals a strong buying opportunity for investors. This is because after the second wave is completed, the third wave, generally the strongest and most decisive part of the cycle, begins, and it usually features sharper and more voluminous upward moves compared to the others. The fact that the price is currently undergoing a second wave correction is not a cause for panic. On the contrary, it can be interpreted as a strong technical signal that the market is preparing the ground for a new upward move. During this correction phase, the key question becomes which levels the price might pause or reverse from. This is precisely where Fibonacci retracement levels come into play. The combined use of Elliott wave theory and Fibonacci analysis can provide investors with highly accurate forecasts. Looking at overall trends and previous wave movements, second wave corrections usually end between the Fibonacci 0,618 and 0,786 levels. These levels represent the so-called golden ratio areas in technical analysis, and are zones where investor psychology tends to react most intensely. The current price zone lies exactly between these two critical levels. This increases the likelihood that the price could stall and reverse direction in this region. These levels also act as strong support zones, as many investors prefer to buy within these areas, thereby injecting fresh liquidity into the market. If the price begins to lose momentum near the 0,618 level, shows a slowdown in downward pressure, and buying interest starts to increase, this could serve as a strong signal for a reversal. However, sometimes the price may dip a bit further, retreating down to the 0,786 level. This is also a completely acceptable movement within the Elliott structure. Such corrections should not mislead investors. Even pullbacks of this depth help lay the foundation for a healthy third-wave rally. What's important is that the price shows resilience at these support zones and starts forming bottoming patterns there. When observing the current price movement, it can be seen that selling volume is decreasing. The price is moving sideways within a range, and no sudden breakdowns are occurring. Technically, this indicates a period of stabilization and consolidation. If the price starts to react upward from these areas, it would mark the beginning of the upward move that triggers the third wave. Third waves are usually the phases where the sharpest and clearest gains occur and represent the periods during which market participants earn the most. Therefore, second wave corrections are strategically significant. It should also be noted that such structures guide the market not only from a technical standpoint, but also psychologically. Toward the end of the second wave, many investors experience uncertainty and anxiety, and sometimes even lose hope. However, it is precisely during these psychological lows that major reversals often occur. Therefore, instead of panicking at these levels, it is critically important to closely monitor the price reactions and analyze potential reversal signals. In the current chart, the price is slowly approaching the 0,618 level, and as it nears this zone, the candlestick formations are becoming increasingly indecisive, signaling that buyers are starting to step in. A potential bullish divergence or a bullish pattern forming in this area could trigger the beginning of the third wave. In that case, the price is likely to accelerate upward and begin testing new highs. When the chart is examined more carefully and in depth, it is clearly seen that a distinct downward trend dominates the RSI indicator. This downward trend can be considered one of the underlying technical reasons for the ongoing price pressure. Oscillator indicators like the RSI are extremely important tools for investors, as they show how close the market is to overbought or oversold conditions and indicate the direction of momentum. In the current situation, the fact that the RSI is moving below a descending trend line indicates that momentum is weak and that buyers have not yet gathered enough strength. However, such downward trends must eventually come to an end, and at that exact point, major moves can be triggered. A breakout of the RSI above this descending trend line would be a highly positive and noteworthy development from a technical analysis perspective. This breakout would not only represent an increase in the indicator's value, but also be considered evidence of a fundamental shift in market momentum. Trend breakouts observed in indicators like the RSI often provide early signals of upcoming price movements. In other words, an upward breakout in the RSI could signal a strong bullish move in the price chart that has not yet materialized. Therefore, a breakout of the descending trend in the RSI indicator is not only a positive signal for investors, but also potentially a major opportunity. We should always pay close attention to the RSI indicator. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.